What does Friday change for you and the team, if anything at all?
What we have seen last week was pretty remarkable. The Fed embraced high for longer. Markets priced in for high for longer, and the Fed endorsed it, essentially. And markets didn't blink, right? So this wildly swinging narrative, I would say, is a feature of this new macro regime of elevated macro uncertainty, where cyclical forces are interacting with structural forces in very unpredictable ways. So having repriced number of rate cuts from 7 at the beginning of the year to 1 early last week, I guess it's not a surprise that on one weaker print on the payroll, markets then jump to the other side. But what is really remarkable is that the Fed endorsed high for longer, but markets are holding up against broadly supportive earnings backdrop. And on top of that, there is still room for repricing to take place, which is why we're overweight US equity.
Does this mean you need to be hyper-tactical, or does it mean that you need to cling to different themes, get away from the cycle and focus on the structural forces?
I think it means both. I think given the very wildly swinging narrative that we're seeing in markets, there is room to generate additional alpha by leaning against some of those extreme moves. And on top of that, we have seen how mega forces like AI, how mega forces like aging population, healthcare have been generating additional kind of return on top of what the cyclical elements would suggest, which is why increasingly we're baking in mega forces in our portfolio construction, both tactically and strategically.